You ask me, where's the money? Where's the money? I mean, I don't know where the money is. I've never been good with figures, you know that. I don't know anything about math. It was never my good subject. I don't know where the money is, but if you need money, I'll give you money. But this really surprises me. I'm really shocked. Because I thought we had something here a lot stronger than just business.
What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having an all right day today. Wild, crazy week for Bitcoin, crazy week for stocks, crazy week for altcoins. And currently right now, in yesterday's video, I was talking about the $29,300 level. You could see we did bounce off of that slightly. We came back down, and now currently that level is acting as resistance. But guys, we finally got the volume. We finally got the volume. Now, in all sincerity, a lot of people are asking me again, I'm seeing in the comments, what do you think about a bottom? How bad could this be? Is it over for Bitcoin? Well, I can tell you guys right now, it is certainly not over for Bitcoin, but unfortunately, it does look like we have lost some of the major trend lines right here. Really, the last support, which is this super, super low level down here where we were forming this sort of, it looked like a channel. I guess you could say ultimately it was a rising wedge, but, you know, over the course of a long period of time. And you can see right here, guys, we did actually bounce off of that. But before we get into today's video, what we're going to talk about super quick is the worst case bullish scenario. There is something that we've been talking about on the channel for quite some time. Could it be actually playing out? That's what I want to go over. I also want to talk about where the bottom could likely be and how long do we have to wait for Bitcoin to get back to that critical support around 30,000 that we did just lose. So that's what I want to talk about today. And I need to put out a major disclaimer before I go any farther in the video. There are a lot of newer people in the space. Some of you are OGs. You've been around for a while. I see you guys in the comments. But for the new people out there, this just broke literally a few minutes ago. Terra Luna has crashed to 3 cents and is down over 99.9% in the past 48 hours. And I did do a poll and I said, even if UST does regain its peg to $1, would you actually feel comfortable using it to hedge in the future? I am curious. If UST does get back to $1, would you actually use it? Out of, 1,300 votes, 79% are saying no, but the real thing that I said was some people don't realize this, but you can buy something that's already fallen 99% and it can still fall another 99%. Probably not the greatest idea to try and catch falling knives right now, in my opinion, but at the end of the day, you do you. Stay safe, friends. And I understand that altcoins, they're fun, they're speculative, but when we have Bitcoin doing what it's doing right now, it is not the time to try to catch falling knives on these altcoins. You could go from $100 to $1 and then still go from $1 to a penny, and then still go from a penny to a fraction of a penny, and it starts looking like a Dogecoin thing, right? So I just want you guys to be safe out there. Before we get into the charts, the most important thing to understand right now is ultimately that the best strategy for most people during this prolonged bear market, whatever we're going into right now, is to dollar cost average. A lot of people are not good at trading in bear markets, and most people really don't like shorting Bitcoin or shorting anything in general. So dollar cost averaging is the best strategy. It is time tested and proven. It just works, guys. I've been buying Bitcoin every week since $2,000, and I can tell you that I have definitely outpaced the majority of these, day traders trying to trade all the time. Now, I do trade. But for example, last month, I only put in 2 trades for the whole month, right? So trying to, catch every single move is not always the best strategy. But that being said, had to do my disclaimer just in case, right? Let's dive in and have a look at the chart. Now, in yesterday's video, we did say that we could come down here and actually touch inside of this CME futures gap, but unfortunately, we didn't close it. So was that enough? Was this little test down here what we were looking for? Well, no, we really, in order to close this, would have to come down to $24,610. So keep in mind, we do have this one down here, and we also have the $35,000 one up here. The $35,000 level is looking a lot more unlikely now, simply because we lost this critical critical resistance here at 29,220. Now, it's not to say it can't happen, but as I did say in yesterday's video, which once again, I do not recommend you trade using leverage if you're new, but the plays in a bear trend are to short the resistances. So as we approach these critical resistances, I will never tell you what to do. I'll only tell you what I'm doing, but that is honestly the play. And if you don't feel comfortable doing that, then just dollar cost average. I'm going to nail that in everybody's head throughout this whole market cycle. But you can see that ultimately, if you are looking for a short-term bullish relief, I did say that we should have a bounce off of this falling wedge. You can see we actually did right here. I switched it from the weekly. We were looking at the daily yesterday, but it's a lot cleaner on the weekly. And you can see right here, not to say we can't have these little fake outs to the downside, but ultimately you are still looking for this potential target, maybe back up to that $35,000 level. But of course, that is a big maybe. So this is what a lot of people were asking me about. We had talked about this M-shaped pattern that we saw back in the S&P 500. Now, this started around July of 1996, and it reached the bottom of the capitulation wick March of 09. Now, I just want to break that down for you guys. 1996 to 2009. This was a very long time in the stock markets. You think it's bad in crypto right now that we've been dealing with this for a year and a half? Imagine dealing with it for that many years. Your children grew up and went off to college in the time, you were waiting for this market to essentially correct. But ultimately what we did was we put in this giant M-shaped pattern where then we did capitulate lower than the lows and then we sprung to the upside. So this was a possibility. So if we actually just take this right here, right? So basically, if I just take this, okay, this fractal right here, right? We just take this and we come over and we have a look at our Bitcoin chart right here. Let me actually just get rid of this right now. We don't really need this falling wedge. It's pretty easy to see what we're doing right here in the Bitcoin chart. And if we essentially just put that on top of it, you can see that it is somewhat similar, but it's not exactly similar. So if we bring this up over here, okay, and of course the scale is completely off, so now I have to change it. Oop, inverted it. Here we go right here, okay? So if we actually try to lay this, by the way, guys, there's no way that I'm going to actually be able to perfectly lay this over because, they're not exactly the same, but you understand where I'm coming from here. So you could see ultimately, look, we did follow this, right? We had this peak, then we had this higher peak, then we dropped sharply, and then we had the rebound. So essentially what we're seeing here is actually what happened back here, but there is a little bit of a difference. This was a perfect M-shaped pattern, whereas what Bitcoin actually did was it came down here, then we started putting in this sort of bear flag, and now we fall into the downside. So I don't necessarily know 100% that this is still valid, although you could say that, history doesn't necessarily repeat, but it often rhymes. So if I was writing a song or writing, a poem or something like that, no, it's not exact, but it does rhyme, right? It's close enough. So there is still that possibility, just for example, if I was to extend this area out here a little bit farther, and we just pretend like, maybe this had lasted a little bit longer like this, well, then maybe this is that capitulation that we're looking for, right? However, personally, I'm just going to be honest. I don't think this is the final capitulation. I've been in these markets for 6 years. I'm not. You're not going to like what I have to tell you, but it usually gets a lot worse before it gets better. But let's talk about what we do need to pay attention to. So we have this 200 weekly moving average right here, which actually, let me go back to the 3-day super quick. Because remember we were talking about this 300 moving average right here? We did lose that, right? And once you lose that, it usually tends to signal a lot more downside, right? We lost it here. In fact, I'm actually going to go into this a little bit more in a video, or excuse me, a little bit later in this video. But you can see right here that we do have the 200 weekly moving average, and this has always acted as support for Bitcoin, at least as far back as we can go. The reason that we don't have data back here is because we didn't have 200 weeks of data yet. You need 200 weeks in order to start the trend, right? Now, you could see that this trend has never inverted. It's never gone down. It's only ever gone slightly sideways and up. That's basically what it's done during the entire history of Bitcoin. So we know that we do have a rising trend, right? So this moving average is probably going to slowly come up like this over time. I don't know at what rate, something like that, right? So this essentially puts us at around $21,834 for the bottom of Bitcoin. Now, I was on the interview on the show the other day with Debate Crypto, and, they said what comes first, 100K or 20K. Now, I'm not saying I think we're going to 100K, but my logic was that unless we have a straight shot down from here, if we have the moving average 200 weekly sitting at 21,833, then the likelihood that we fall below it is very, very low, right? And don't forget, this COVID crash, this was a black swan event back here, right? There were a few wicks back here. Bitcoin was pretty volatile, but ultimately, you generally always end up closing above it within a week, right? Which is why that I consider this to probably be the lowest level that Bitcoin can go to. So, taking this right here, I already showed you guys, we put that over on the chart, but having a look right here, the one thing that is really crazy is these Bitfinex longs. I don't know who this whale is, who they are, what they're doing, what they have in store, but someone clearly is loading up now massively on their longs. And even though the price has fallen all the way down to 25,000, they are still loading up. This candle doesn't even have a wick yet. I mean, they are still loading up on this, and the last time that this did happen was down here. So do they know something that we don't know? Is there some crazy manipulation going on in the background? That is to be seen, my friends. But talking about the potential Bitcoin bottom, I actually want to turn it over to one of my good friends, Eric Crown Crypto. He's been on the channel multiple times in the past. We haven't really done a lot of interviews lately. He talks fast like me, so we people laugh about that. But I love this guy's analysis, and I highly suggest you go check out Eric Crown's channel. He taught me a lot about what I know today with my trading. Very knowledgeable. He's been in the space triple as long as I have, not in crypto, but obviously, trading markets and stuff like that. And he actually put forth a very logical, example or scenario of where Bitcoin could go based on what has happened in the past. And I want to turn it over to Eric right now. So check this out.
What we're looking at right here is a yellow and a green moving average. The yellow is a 21 exponential. The green is a 55 exponential. When they cross, it is called the silver cross. And it's honestly, I think it's way better than a fucking death cross or golden cross. I think that's mostly bullshit. Although, death cross players, they're probably rather happy right now as well. But I think you'd be just as happy playing this one and probably more opportunist, or you'd be doing better opportunity cost, basically, is what I'm trying to say. Anyways, we've seen this cross happen to the downside a few times in Bitcoin's history, 4 times to be exact, counting the current iteration that we have going on. And the move from that basically from that cross has been rather consistent as well. Starting back on over here in 2014, right? We got the silver cross to the downside, next rally up to the 55 gets rejected, and about 63.62% from that high to the next major macro low over the course of 63 days does occur. Over here, we do see the same thing in 2018, but different percentage points. In this case, about 10% less severity. Again, I kind of would expect this, or I think philosophically you should expect this on assets that are maturing over time. And this one takes about 54.5% done over the course of 56 days from that last attempt at a rally towards those moving averages, rejection, and down we go. This one over here, again, Rona dump. We do see, the cross happen after the dump. Again, when we have a black swan event like that, it's not gonna get them well. But still, the percentage drawdown from the big break to the next major low, very much in alignment with the past few ones as well, about 51.25%. So again, just kind of playing around with numbers here from that last rejection high to where we're currently at. If we were to say, 45% is relevant, or even 40% is relevant, that puts Bitcoin at about $24,500. If we say, closer to like 45% is relevant, because again, maturing over time puts Bitcoin more around like 23, 50% puts Bitcoin at about, 21 or so. So I do kind of like this area in general for at least a bit of a bounce, at least a bit of a corrective bounce. This move has been pretty damn aggressive, like I said, but maybe that's just me.
But the important thing to remember, shout out to Eric. That was awesome, by the way. I love his analysis. So there you go. That's kind of where he's looking at, which is even a little bit higher than the area that we just spoke about. But of course, maybe over time that 200 weekly comes up, and then maybe we do only hit around that $23,000 area, right? Some people say we're going to 10,000. Well, we'll discuss that if it happens. The only thing that I could say right now is that, as I said in yesterday's video, all of the data that we have from Bitcoin for the past 13 years is only from times when the markets were pumping or the stocks were doing well, when there was massive money printing. They're not doing that right now. We also have the war happening as well, and there's a lot of other macro factors at hand right now, right? So this is why this scenario is a little bit different. Like Willy Woo says, is the bottom in? I don't know. Fundamentals taking a backseat to fear-driven trading. What I do think is we are not trading Bitcoin. We are trading macro and equities. Right pane is the S&P 500 right here, which will determine Bitcoin's directionality. Left pane right here is the equivalent of Bitcoin support. So he says that if we do come down, to these levels right here on the S&P, that's the equivalent of Bitcoin coming down to these levels. So that would actually put it somewhere in the ballpark between $17,000 and $20,000, essentially, right? So just to kind of give you guys a picture of where this could potentially bottom out. But the thing you need to understand is that, with these types of moves, they don't generally recover that fast. Like, for example, we had this V shape right here, but this was a black swan event. This was COVID. And honestly, like I said, if you just scribble this out right here, I think Bitcoin would have just bounced around in this area and continued putting in higher lows, because as soon as we recovered, we went back right to those same levels. Right to the same levels we were trading at, as if nothing happened, right? So you do know that we have the 3-day death cross. A lot of people were talking about this, but really the death cross coincides perfectly with losing the 600 daily on, the daily or the 200 on the 3-day, which is what we're on right now. And you can see right here, once you did have that death cross, same thing that we had it up here, you did have that massive capitulation event, and very similar structures if you actually have a look at it, right? You do have the the death cross of the 50 moving below the 100, moving below the 200, same thing here. And then eventually you move into your death cross where the 100 goes below the 200. And then eventually they cross again. And then that's when you start your rally. Now, the thing that I want to point out is that this was a phenomenal time to accumulate Bitcoin, but I can't tell you how boring it was down here. And this was also my first bear market, by the way, like first official bear market I ever went through. So, it was a little scary. We didn't know back then. Keep in mind, we didn't have countries adopting Bitcoin. We didn't have Bitcoin ETFs. We didn't have, states, using Bitcoin and things like that. We didn't have MicroStrategy and Tesla putting it on their balance sheet. Now it's a little different, right? It's kind of it's a little bit of a bigger entity than it used to be, right? Which is why I don't think Bitcoin is dead. It's not dying. It's not going anywhere. But you can see that from the moment that we fell here until the point that we broke even was about 188 days. So just to put that into perspective, if we're doing the same thing that we did back here, with this dump, and then we go into, this long sideways, sort of Adam and Eve bottom, something like this, if we actually stretch out 180 days from here, just to put this into perspective for you guys, that could put us right here at around November of this year, just to get back to the levels that we're at right now. So just to put that into perspective, and then that's not even until, you cycle high to the new highs, right? That could still take a year to 2 years. We might not even see a new all-time high for Bitcoin until late 2023 or something like that. So just want to make sure that you guys could stick it out. But on the bright side, considering we have been on a downtrend, if you look at where we are here, well, we've already been on a downtrend for at least 6 or 7 months at this point. So we're already a third of the way there. We're 33% of the way through. So you've honestly made it through the craziest parts. It's unfortunately, it actually tends to get more boring after this. So for those of you that do stick around, I get it, guys. I did read a couple comments. Some people I just got to step away. I got to go do something else right now. I get it, guys. But at the end of the day, this is usually where the massive money is made. The accumulation phase is down in this area, right? Nevertheless, I am still expecting some kind of a rebound at some point. But I just wanted to make you this video. And by the way, if today's video seemed a little scattered and all over the place, I have a lot of stuff going on right now, guys. Like when I tell you I am maxed out, my calendar is filled. I am very, very busy lately. I do a lot of things outside of crypto. I'm very personal about my life. Some of these other guys are always on Instagram posting what they're doing. I like my privacy. You know what I mean, guys? But I still make time out of my day to make these videos for you because I love you. I believe in Bitcoin. I hodl Bitcoin. I have a lot of Bitcoin. I have no intention of selling, and I will continue to accumulate over this bear trend for the next year, 2 years. Doesn't matter to me, guys, because at the end of the day, this will pull through. And Bitcoin, which really is what people need to pay attention to, God, I'm ranting today, but I gotta just say a few things. So you guys know I really don't like to talk about altcoins on this channel, but I get so many people in the space that actually tell me, you know, your channel would be bigger if you talked more about altcoins, but you talk so much about Bitcoin. I've talked about a handful of altcoins this year, and guess what, guys? All of those altcoins are down now. Now, does that make me a bad person because I talked about them? I don't know. Bitcoin's down 55%. My point is that they are risky, right? And you do have to allocate small portions of your portfolio to altcoins, but your goal, well, I don't know what your goal is, but my goal, and I've said this on the channel for years, is to accumulate more Bitcoin. I want more Bitcoin today than I did yesterday. I don't care about the dollar value short term. I'm not overextended. I have cash on the side. And sure, I have some speculative altcoins. Now, if you buy, 20 altcoins, 19 of them tank, right? But one of them does 100x. That's the altcoin game. And that's what gets a lot of views and that's what gets a lot of hype. But I tend to stick to Bitcoin specifically because that, in my opinion, guys, is the real deal. That is really the new monetary system. And that's what I believe in and that's what I hold. So what I'm saying to you right now is I wouldn't focus too much on the altcoins. Like I said, Luna fell 99% and then it fell 99% again in the next 2 days. You can keep falling 99%. Bitcoin is not going to fall 99%. It's never done that in its history before. And even at the all-time highs, all the way down to the bottom, it always has recovered 3.5x. And for people that are saying, oh, well, it's different this time because of what's going on. The Fed is hawkish. Yeah, they're hawkish for now. They're hawkish for now. They're not going to be hawkish forever. They can't be hawkish forever. It's impossible. That's not how fiat currencies work. Google it. Look at how they work. You need inflation. You need some form of debt in order for a fiat monetary system to work, which is why, yes, it's going to suck in the short term, but once they get back down to those 2%, 3% levels, they are going to turn dovish again, or at least minimally neutral. And when that does happen, hopefully you're still around. You've been accumulating Bitcoin for 6 months to a year, and now that Bitcoin is worth $100,000, $200,000, $500,000, maybe in 6 to 8 years from now, right? So you have to be smart, you have to play the long game, and you have to be patient. I hate quoting Warren Buffett, but what did Buffett say? He said the stock market is a place for transferring money from the impatient to the patient. And that applies to crypto as well, specifically to Bitcoin. Have a great day. I love you guys. You're awesome. My name's K-Dub. This is Crypto Zombie. Until next time, stay crypto. And of course, peace out.